Let's get some insights from Anthony Gray, Head of Risk Solutions at Travelex, the world's largest foreign exchange and international payments company. In December, if you remember, Anthony predicted that the Aussie dollar would lose its top position among major currencies. He was spot on. The Aussie plunged more than 7% from its January high before rebounding in early February. Anthony, good to have you with us on the show, and good call there. There's some concern of a Greece-related risk. Some say, though, that the risks are starting to ease. You're not convinced?
I am not convinced. The euro has rallied off those 10-month lows we saw a couple of weeks ago, and is doing quite well. But the Greece bailout plan and what has happened, there's a couple of things that have come from it. One, we're highlighting issues still from Portugal and the downgrading of their by Fitch of their ratings, as well as there's a little bit of concern around the fact that Germany still has veto powers around the fact that they can halt the bailout of Greece if need be. Those two factors, I think, really highlight the structurally flawed monetary union, and I think will really dampen or halt the progress of any long-term growth prospects for the Eurozone.
So what does it mean for the euro? I mean, we saw the euro drop to 123 back in 2008. Will it test such levels?
I think it will. I think in the next couple of months we'll actually see it test around 125, and that will be quite a drastic change. There's good things coming out of the US as well, which are causing this to happen. But you're right, around 123.30 was the low we saw in 2008, and I think by year's end we will be testing those levels. I don't think it'll go as low as parity, which some people are calling, but there is definitely some downside in the euro.
What good things are coming out of the US?
US, I believe, is fundamentally good. We have consumer confidence figures that will be released later today, and we had a bad number come out. It was 46 last month. We should see that come out a little bit higher today, as well as payrolls. We have numbers coming out on Friday. In a very illiquid market due to the Holy Week holidays. So those numbers, forecasts see it from minus 40,000 new jobs created to positive 400,000, with the median and my expectations sitting around 200,000 new jobs created. That will lead to a dip in the unemployment rate of 9.6%, and therefore with unemployment peaking and the current rising Treasury yields we've seen of late, I see very good news for the US on the front. I see the Fed actually hiking rates sooner than expected.
When?
The million-dollar question. I see it in Q3 2010.
Hey, Anthony,
they will be the first to hike. Sorry, go.
You've been bearish on the Aussie since last December. Why? I mean, the data out of Australia has been pretty good.
The data is good, but I still see the Australian dollar as a relatively small currency. I do see the Aussie going lower, and my main call for 2010 would probably see that we'll probably see a print of 85 cents on the Aussie US. There's a couple of factors here that I'd like to touch on. One is the strong fundamentals coming out of the US, which I just touched on. Two, Australian interest rates. Now, we've had speakers Lowe, Governor Stevens, DeBella's talking today, and they are all going to be talking up interest rate hikes. I expect us to have a hike in April, so in a couple of weeks' time. I expect us probably to have another hike in June. But what I also expect in hikes is something from China. China needs to be on watch at the moment. They are very close, I believe, to hiking their official interest rate, and that will spell disaster for the Aussie dollar. Our exports, or demand for our exports, will dampen and could send the Aussie into a bit of a spiral.
That hike for China, when, how much, how aggressive will China be?
I don't think it'll be too aggressive. They've got a couple of things up their sleeve at the moment. Obviously, there's a lot of talk about revaluation of the yuan. I think a hike in interest rates will come before that. So I expect roughly around a 0.25% hike in the next couple of months, and more to follow by year's end.
Anthony, before we let you go, what do you think would be the best currency trade for 2010? If you must get in, what would it be? Which cross?
I would be a couple of things. Because I'm so bearish on the euro and I'm slightly bullish on the CAD, I'd probably look to go a short euro CAD at the moment. CAD is doing wonderful things. Unemployment, I believe, has peaked. Their GDP numbers are running better than expected, or better than the BOC's forecasts. And of course, we've got strong commodity prices at the moment. So I would actually look for a short euro CAD position to be my main trade for 2010.
All righty, Anthony Gray, Head of Risk Solutions at Travelex. Thank you so much for joining us on the Trade.